What is the stock market and how to get involved in the stock market within 3 minutes? First of all, the stock market is where publicly traded companies sell parts of its company ownership, okay? So when you buy a share of Microsoft, you're actually part owner of Microsoft. When there's a vote for the stockholders of who should be the board members, the CEO, you get to vote, okay? Depending on the stock, most votes are A grade stock, and then there's a lower tier stock that you just get to enjoy part of the profits of the company. Some companies, if they're super profitable, will pay a dividend, which is basically paying you part of the profits of the company when it's profitable every so often. And that's what stocks are. Think of it as buying a collectible, whether it's Pokemon cards, a nice purse, and if you buy the right purse, it'll go up in value. If you buy the right Pokemon card, it'll go up in value if there is a demand for it. And every so often you'll find a purse on sale, a Pokemon card on sale, lower than it's really worth. That's when you want to buy it, and then you instantly, when you sell it, you make your profit from it. And that is the stock market. You do have to get a stock market account, which you can easily do that. You can email me, ask me questions. I can do that. Links in the bio for the 2 brokers accounts that I use. But also, if you live in the United States, most banks, if you ask them about the stock market, they have their own stock market trading account as well. A lot of them are free, and a lot of banks also have a investment advisor there that's included in your normal business there. So you can literally get advice from a investment banker, and you can take their advice or not. You can also ask them to help teach you. And most stock market accounts have what is called paper trading, which is you're not spending your own money, you're practicing with the real life stock market to see what will work, what will not. And it's really supply and demand. If you're buying a stock that there's no one knows what the product is, that's a bad idea. If you're buying a company that everyone knows it, like Apple or Microsoft, then you're most likely paying retail for it. And okay, then you're going to have to wait a bit. And for the normal individual, and I'm talking to like college students, are going to be in a second, is what are you going to normally be buying? When you have a job, you'll have a 401k, which means you do not have to pay taxes on the money that you put into the account until you withdraw it. Then you have to pay taxes on it. And then it's called ETFs, which is a basket of stocks or bonds or both that you invest in, okay? The benefit of taking your 401k, most companies do a match, which means moment you put $1 in it, they match it, which means you just profited 100%. The stock market, historically, depending on the year that you go through, is about 6 to 10% return on your dollar per year, okay? 100% beats that any day of the week. And if you withdraw it, there are fees, but even withdrawing it, do the math or talk to your own investment advisor, you'll still profit on that. So that's number one, is your 401k. The way you can invest as an individual is those accounts that I talked about, link in my bio. And also you can use what is called a ETF for the normal top stocks, which I'll give it to you right now. Number one is VOO, and then QQQ, which both of them are very good. Do your own research on that. And those 2 ways are what most people will be able to invest in. If you don't want to invest in the stock market, but you want to have your money doing something, you can also use the high yield savings account strategy, which you can even put your monthly expenses into it before paying your bills, and you'll get a little bit of interest on it. The ones that I use, the one I use is about 4.3%, and I've seen them all the way up to a 5.5%, which, if you go back to what I just said, with the stock market being a 6 to 10%, but that 6 or 10% has risk factor. High yield savings account, the only risk of that is if the bank goes under, but it's actually federally insured, so you'll get your money back anyways. So that's one way of basically investing for free. So those are 3 different options: your 401k, investing in the stock market with individual stocks, or doing a high yield savings account. I recommend you look at it as going to college, where you're going to college for 4 to 6 years and you're not getting any return at all. So you put in money in there and you don't take it out, and you're using that as a investment. So thank you very much. If you watched to this point, follow me, comment below gold, and ask me questions. Thank you very much.